Hello everybody, what's up? It's Booksy. Today is January 2nd, 2024. Yesterday I released, kind of late, a really long form video that it's about an hour long, and I understand that a lot of people don't want to watch that kind of thing. They just want kind of like the nitty gritty. I personally spent a lot longer than that building that chart, and so for me it's not really I just don't feel like it matters. Like if it's long, it's long. It just kind of takes as long as it takes to explain it. But those kinds of videos are really about understanding how I came to that and then doing those comparisons in a very like meticulous way and trying to make sure I cover as much as I can. Because a lot of the mentality, especially in the AMC community, is really this trust me bro kind of mentality where somebody plops up a comparison and then they just say, yeah, this is that and this is what's going to happen. And this has been going on for years now, and I think at this point everybody's jaded enough by that we've actually come to this place where a lot of people just don't trust the chart, and they don't trust people that do TA, and they don't trust anybody that's posting videos. My goal has always been to just do the chart as best as I possibly can, present it to people so that they understand what I'm looking at, because people seem to be interested and they want to know what it is that I'm seeing. And they like sometimes to see the things from the point of view that I'm sharing them from. But that doesn't always mean that, I'm 100% right. And it definitely doesn't mean that just because I chart something that it's going to happen. So I spent a lot of time, I know this is like a little bit of a long intro, but I spent a lot of time on that chart. And so to try to present that in a short form video is basically impossible. It's just not going to happen. And it's not because I'm trying to be self-indulgent or something like that. It's because it's just a lot. This is a setup that is mathematically pretty darn sound, and I'm pretty happy with the way that I've charted it. It might get tweaked here and there as we go along. But for me to kind of explain how I map this out in a really short form video is challenging. And when you look at this, already people have told me that they can't read it. And I'm like, well, look, it's a comparison between a setup that we've seen before in multiple places. This setup has happened no less than 4 times, okay? The first time was in 2020. We saw the exact same setup. I know you guys are like, what? That's not the same. Well, actually it is. And I can't go into that in high detail. I already did that in the video yesterday. Please check it out if you're interested in understanding why. But this is basically like the setup, right? Is that you have a push down, you have an M cross, right? An M cross is just a sine wave cross, a creek cross. Then you have a push up. And what happens is that you get this kind of slingshot move, right? So after you find a bottom, you jump the creek and then you push up. And what happened in January is that when we did that push up after the M cross here, in the push down, we have this push up on the slingshot. It comes up, meets the target it's expected to meet. And then instead of dropping back down through the creek that was jumped, we actually find that it finds support on it, and then it has a reaccumulation. And every other instance when this has happened, ever since then, it has not done that. And we've wrongfully seen these breakouts that we think are going to have runs, and then they don't. And it all comes back to this kind of midline right here where basically after it pushes up, it melts through and then you end up back into the range that you were in, and then you break down, and this ends up being this rotation around a midline. And it's happened repeatedly where it's broken down, you get this cat ear, push down to a low, and then you get a secondary buy-in back to the top, and then it redistributes in sort of a UTAD fashion, right? And I know it's not exactly like that, up thrust after distribution, but it's very similar because it basically creates this bigger cat ear that then breaks down again. And it's done this repeatedly 1, 2, 3 times, okay? So the simplest way I can put it is that we're in a Fibonacci sine wave expansion. It's measuring out pretty darn accurately to a fib sequence, and we've been doing it ever since the breakout in January of 2021. And each of these has expanded outward the same fractal iteration over and over again. And if we're to continue to do that, we're basically going to be entering like a gully period from now until about 2025. Now, that's a big if, because we don't know what's going to happen on the next reactive move. Because I believe that what we're experiencing right now is essentially these bottoms. So we've had a bottom here, The last two bigger ones, there was a smaller one that happened right after the June push-up. But the last two ones that we've been able to analyze, and the ones I've got marked out here, one of those was in July of 2021. The last one that we really experienced was this March 2022 push-up. And then prior to that, it was the big one that was the short squeeze. It's the only other one that matches the setup that we're talking about. And all of them are the same. Basically, you get this preliminary supply or support coming down rather, and then you basically have the double up thrust. That creates a trend line. You go away from that, you get a shrinking iteration downward, and then you push up in a slingshot format to meet that. And the same exact thing happens in both of these cases. This one's really small, and you have to zoom way in to see it, but it does happen right here on a bounce, and then it does the same thing here, drives back down after the push-up, but it meets that orange line. Again, it's hard to see. I'm on the 4 hour. You'd have to be on like 30 minutes to an hour to see it efficiently. I'm not going to go through that. Did it in the big video. But this one's easy enough to see very clearly. And it measures all out, by the way, mathematically the same. And I'm using these midlines and these top and bottoms on the wave as anchor points. And yeah, everything measures out really cleanly when you do it right. And basically this line, you can see it's the same as that 2020 double push-up. And then you get the shrinking iteration downward and then the slingshot back to the top. This is a way for us to estimate in the future where we might go. But there are some caveats, and a couple of them are a bit tricky. They're a little bit hard to kind of pinpoint. A lot of this has to do with what we would call trajectories, right? And one of the big trajectories is this final one. As it drops down, often is your trajectory out to that midline. We find that that's also pretty darn true here as well. If you take this trajectory at like 63 degrees, and then you work itself back out, you'll see that that's actually the same trajectory coming outward here. So 63, 63, it ends up matching, right? In, out. And the same thing happens here, in, out. But the difference is what happens after you get to this point, because again, in this particular case, the upthrust goes way up past the top of the range, just like it did here in March. This one, when it comes back down, catches on the creek, follows this guy back up, the trend line, the trajectory out, and then it ultimately creates a reaccumulation and then leaves. Whereas here, in this particular situation, on the slingshot, you do get that big move, but then you'll note what happens on the breakdown. So you've got the exit trajectory. So entry trajectory, it says 60, 68 here on my chart, and you can see that it doesn't catch and continue. Instead, it breaks down and then ends up bleeding back into the range, and you get the distribution through the midline. And that's the same thing that happened here. When it pushed up, it dropped back down, and then it ends up bleeding down through past the midline. And then you get this long form kind of buy-in back up to the top of the channel. And that's a channel check. That's ultimately what that's about, is coming back up to the top of the channel. And the same thing happened here. Come up to the top of the channel, distribute. Come up to the top of the channel, distribute. Come up to the top of the channel, and then we've got this really long distribution that happened here. And ultimately, even though you can't see it because of extended hours being off, this does push up and hit the top here, and it does go back and retest the top. So I'm not going to do a really long explanation of this. I know you guys are like, it's already been 8 minutes, Booksy. Yeah, well, this is the short video, I promise, okay? That's all as much as I'm going to explain it. So what I'm doing now is I'm using rotational symmetry iterations and then the overall pattern to determine what's most likely. And here's what I'm thinking, okay, just to clarify. We are in a very similar situation right now, right? We have the double up thrust, we have the shrinking iterations. So what's remaining is that up thrust motion where we're going to get, and I do believe we're going to get it. I think that it's presenting itself like a series of LSPYs that are about to break down. But if you look at where the trajectories are here, I know it's a little difficult to see because of the sine wave that I've got, but you can see there's three main lines that I want to look at. So one is this red guy right here. This one comes from way back, all right, and it is pretty important. And you can see that it's basically cutting through the middle right now of the iterations that we're seeing. And if you go back further, you can see it basically cuts through the 50% here And if you go way, way back, you can see it actually starts on this early distribution. So this would be the M cross line from back here. You can see why that I would say that, because basically in March 2022, we pushed it, then we jumped it in August, right? Back tested it, and then we came down alongside of it, and we're doing it again. We're actually doing, we're wrapping around it again. If we find support on it, I think we're going to push away from it, much like we did every other time we found support on it, so we'll push away and head to the upside. So we're in that mode right now where we're shrinking along it. This is very similar to what we experienced back in, again, both of these other situations, as you can tell with the bounce and the wrapping. I just talked about that a minute ago. So right now it looks like it's about to go, but there's definitely no way to know for sure until we see a jump over what I would consider to be the most important creek right now. And it's a bit odd because the way that I have this drawn out, it has to be done in a particular way in order to make sense. And frankly, like there's a couple different ways to do it. And even though in the video I said that I was very confident about the chart, this is not like set in stone just yet. I believe that the orange line right here is probably the most critical line that we're going to need to jump. And if you want to draw it, it goes to the May 23rd top, which is earnings of 2023, to the top that we just experienced in November earnings. And I believe that's the main rotation. And we talked about this a little bit in the longer video, but this is basically a perfect rotation around that reverse stock split. And so right now, I think that that's the main one that we're going to want to go around. Now, you might be saying, well, yeah, but in the rotation video, you talked about how that is actually over here, right? So like, haven't we already jumped it because the rotation's at like $20.20 right here? Sorry, I got a little off. So wouldn't we be like jumping it right now? Isn't that the real one we want to get over? Well, yeah, it is, but ultimately, like, that's not going to be the main creek cross. Does that make sense? Like if we were to push up against that right now, you still have to make a jump, retest it, and then push up among the outermost creek. So what I did is I took that and I just expanded it outward, and then this would be the one that would be like the final confirmation, okay? Now, if you're looking for price levels, there isn't one, right? It just depends on when we get there. If we were to head there right now, we would hit it around like $6.90 to $7. That makes sense because the previous bottom was $7.05. So if we were to push up right now, we might hit $7.05 and then reject, jump over it, and then come back down and land at like $6.50 or something like that, you know? Like it'd be easy enough to see that happening in that particular way, something along those lines like this, okay? But there's other things at play here, and when I did the measurements, the best I can, all right, not being 100%, but being very, very confident in what I'm doing, I didn't necessarily find that that was the case, like that we jumped early. Is it possible? Yes. Is it possible that we go right up there this week and that by January 19th, we're at the high? Yeah, because in the rotation, that's the target, is January 19th. And this was drawn out a while ago, and this has to do with measuring out the target. So yes, is it possible that we're in the 9s all the way up to probably by like 11 by the 19th? Yes, that's totally possible. Seems crazy, but that seems to be the setup. All right, in terms of the rotation, that's where it measures out to. However, when I did the big macro chart that I did in the video yesterday, I found that the measurement worked better. And again, you might say subjectively better, but I think it's objectively stronger if it still continues to iterate down a little bit further to about 550s around the same time. So that's quite the opposite. That's suggesting one that it goes up to the high by the 18th. The other suggests it goes down to the low by the 18th. Pretty significantly different, right? So what do? Well, listen, I don't particularly care. If it drops here and goes down again, my expectation is that we're going to iterate the same nonsense again. You're going to get another one of these push-ups and you're going to drop down again. It's that simple. You're going to come back, you're going to drop beneath like beneath like 595. Then you're going to come up, you're going to retest, reject off 595, and then come down to like the 550s. And then that's going to be roughly where we hit the bottom. And at that point, my expectation would be that we're then going to push back to the upside. And I do think that we're going to get up pretty high because, again, if you look at where this orange line is going, it goes really high. There's no there's no other way to draw it, particularly. And you can say, well, maybe it's really low, Booksy, it's like down here. And okay, well, I still have it hitting that area, right, in the 10s. Maybe it's not going to get past that gap in the 10s, and then it's going to drop again. Well, we don't know yet. But what I can tell you is that in every other situation, it's been fairly straightforward. The bottom of that U shape ends up being the trajectory line. And when you look at where that is, it's very easy to see why that's the case and why that's been respected. And there's not really any other way to illustrate it. So all of that being said, when I look at this big picture, to me, it seems like it's going to, if it were to go kind of straight up from here, it would be around that $15 area. That's pretty significant to me. That's where I said it was probably going to go before we saw another big drop, because if you look at the bigger kind of mirroring that might be going on, it's a might. On the last big video I did, I said 1440. I said 15, I think, in the title, but it's like 1440 and then a potential drop. Very similar, okay? Very similar the way this chart ended up measuring out. So what am I waiting for? I'm really just waiting for that jump. And I gave you guys what I think are the primary targets there that you'd want to look for. Locally, I do think where it's at right now is basically where you're going to see either a make or break moment. So right now, if it rejects and heads low, I think we're going to probably head low, meaning it breaks beneath new lows right now. We're probably going to head low until the 18th. If it pushes up right now and starts gaining support, we might be heading for that bigger cross. But regardless, I'm not buying personally at all unless I see it do this push up and jump over this outer creek. Once that happens, then yeah, I think we're probably in like a takeoff mode. And then ultimately, once it hits this orange line, whether it be early here at like the 14s or it be later up here at near $20, and I don't think that's an accident. I think it's right around that rotation point at 2020, which just so happens to be like a really pivotal marker going way back. This was like that midline here. That's the area that I think we could go to on a bigger push-up. But no matter what happens, even if it pushes up here, there's no way this is going ridiculously high unless we see a support built over the creek. So previously what we had to see was that jump and then that pushback, and then it had to reaccumulate above the range. In our particular case, what that would probably look like, I drew it a little weird here because I drew it more like March, because in March it's like a really simple move that's like an up thrust, and it just kind of courses across like the 50% line like that. But if we were to look at this just again from a very like simplistic point of view, basically what that would look like is that we would have some kind of a push up. We would hit this marker here at like 14. We'd come back down to like maybe even as low as like the 890 area. And then when we push up again, we would basically reaccumulate high. And then we would see a secondary move potentially up to that $20 area. I had said previously that I thought we were going to probably see 34. It is possible that that happens, but in order for that to happen, you need to see a bigger version of this play out. So what would then need to result is that we would need to see this push back down and hold above 12 and basically do a bigger version of that to the upside. And then that could get you up to highs by about summer of 2024, maybe going into as late as August of 2024, right, to go retest that upward trend up here. There's not really many other ways I can see this happening right now. So in my opinion, it's like it's going to do this or it's not, but you're not going to have another opportunity, right? Like if this doesn't happen right now, then the only thing that remains is downside. So this is going to be the short of it, and I'm going to finish up just about 20 minutes right now. The short of it is really simple to me. These are critical moments of make or break. Right here, you could see a breakdown. If it doesn't hold and it goes down, it's probably going to go low. Right here, you could see a breakdown, right? If it doesn't hold and it doesn't do the reaccumulation, it's probably going to go low. Why? Because in every other sense, when we've redistributed, if it doesn't hold here, it drops down and starts making a new low, and it heads to a new low. If in any of these situations we go to that new low, it's going to be sub whatever the low is now. So if the low right now is only 6 or 595 or whatever, it's going to go below that. If it ends up being 550, it's going to go below that. Early estimations, current price target is that if that were to happen and we were to break down, that this basically would redistribute back down all the way to essentially like 250 area, potentially a little bit higher than that. You know, it really just depends on how you measure it and how quickly things go. Could be more like $3, but it's basically that same area. That reminisces of earlier targets that we've had on AMC. Why would this maybe be the top? Why would 2020 maybe be the top? Well, I don't know if you recall, but way back when we were in this area and then even down here, I said repeatedly that I thought we were going to come back to 19 to 21. And the reason for that is because 19 to 21 basically is like the original sort of supply. It was where the original top was on AMC. And when we got back to this area, we were spending a lot of time in the 30s and whatnot. But ultimately, like what it represented was this kind of original top that we had back in like 2016, 2017. And it would be a massive retest is what my thought was before maybe heading lower if we were going to distribute. That was back here. I thought, yeah, there's a strong chance that we're going to come back and retest that top before anything else. Well, that same value, whether we like it or not, and I understand that it's different now. You know, we're going to be saying a lot of different things here, but that same value is right here. You know, the same value that was 19, that's now 180, right? That same value, monetarily speaking, just from a straightforward standpoint, is now right here. That's that $20 mark, that $19 mark, and it just so happens to correlate. I'm not going to do the fundamental analysis on that and to tell you like that's exactly where it has to be based on fundamentals and all this other crap. All I'm saying is that there's a parity between those levels. It kind of makes sense. Long term, if we sell off, okay, I don't see us coming back up to 2020 until probably near 2025. Does that make sense? Because then we would be in a situation much like this where we're basically riding that sine wave up back to the top of the trend. So there's not that many situations here that I'd be looking out for. And I think short term, it's pretty straightforward. So with that being said, I think this is clear enough. I know there's people out there that are talking about massive downside going to like 4s or 2s or 1s right now. I'm not saying it's out of the question, but I think based on what I've been analyzing, I'm not seeing it right now. I'm seeing a push up to redistribute. I think there's a desire to go back up, retest this 2020 level, just like there was back here. And I think that in order for them to drive the price lower, we would have to see something much like what we saw in March of 2022, because that's what happens in this bigger iteration. It just is. And when you look at the great picture here of this cat ear with the drop and then this big retest, it's happened every single time that there's that big drop. And really all we're trying to estimate is, well, where does that go to? And previously I thought, well, it has to go up here, right? It has to go back up to the top because it's going to go back and check $34. But I don't think that's the case anymore. I think that based on the reverse split, based on that shift in the chart, I think it's actually this $20 mark. I think it's this purple region that I've got marked on the chart. And so I think that's very likely within the next 3 to 6 months, could be really soon. And if we're going to see any kind of breakdown, it'd probably happen after we hit like $14 to $15. That point, I think you could see that what we talked about in the other video where it basically drops back down. It wouldn't look like this. It wouldn't come up. It would come low and stay low and have an up thrust here, and then it would drop back down. And if that happens, it changes the dynamic of this a bit, but not that much. It's actually pretty similar still to what we saw here, and I would still expect to see another buy-in and push up, and that's where we get to that run up where you basically get here a little earlier. This could happen more or less like this, where you get here earlier in the case of election season. Okay, that's all I got for you today. Hope you guys have a good one. We'll talk to you later.